Hey guys, hope you are all having a fantastic Saturday. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's get started. As promised, today I am making a small little video addressing the most important parts of the SEC GameStop report. I did not want to pass an opportunity to give my own thoughts about it. I know the vast majority of you guys have already seen it and made up your mind about how it is well, but perhaps you might have missed some important key points that should have been wrinkled in your brain. Judging from reactions upon the release of this report, many were very disappointed in the SEC for not addressing the clear manipulation going on, and for not calling out the big players such as market makers and hedge funds in a manner by which we think of it fair. Personally, I was not disappointed at all in the report, and there are two primary reasons for it. First is that, as I have said plenty of times before, the SEC is not going to stain their name by causing a market shift that could produce a squeeze by putting accountability on the shoulders of Wall Street. We have talked in depth about the phenomenon of revolving doors on the SEC, and we have talked about the deep conflict of interests that exists in the agency. It is clear that much of what the SEC tries to do is sort of maintain a balance tilted on the favor of the private sector while hyper-focusing on small cases to show Washington they are not being lazy. They did not blame Wall Street institutions for what is going on with meme stocks because they simply did not investigate too far into it for the purposes of not finding out the truth. That way, when things fall and they are called to congressional hearings, they don't have to lie and can simply blame their negligence on ignorance of the facts rather than having to lie or speak the truth. A genuine report by the SEC that looked deep into what happened more than just a superficial overview was never going to happen, which is why maintaining grounded expectations is so important. The second reason I was not disappointed by the SEC GameStop report is because it wasn't all that terrible to begin with. Yes, it was not what we wanted, but we were never going to get that. What we got instead was something that many seem to disregarding or undermine, which is a capital sin for the members invested in meme stocks. The report actually confirmed a ton of previously considered theories regarding the manipulative tactics that were and still are employed by shorters. This report didn't shed any sort of new profound discovery or accusation we didn't make or know beforehand, but it solidified my confidence in GameStop and AMC more than it already was. If I could summarize this report in one single statement, it would be this. Shorts did not cover, and have not covered their positions on GameStop and AMC. The report makes it clear as day that this is the case, and gives plenty of statistical evidence to back it up. I mean, if you have been uncertain of YouTubers such as myself or Twitter and Reddit account claiming shorts didn't cover by sourcing data analysis, you can use official SEC data and come to the same conclusion we arrived a month ago. This is actually incredibly bullish, because I know there is a great portion of investors who tend to be more skeptical of what they hear on the internet, and now with this information proving what we knew and being official can quite literally manifest a greater quantity in investments from newer investors and an increase by already owners ready to launch into space. One thing I want to discuss is the sheer passion some of you guys have with these stocks. I have never in my life seen people so devoted to finding and exposing the truth, to vocalize their frustrations in a system that is so blatantly unfair and corrupted. With this energy, we have found power among our collective groups, and as such are now the greatest risk that Wall Street and friends ever faced. However, with this newfound power comes a responsibility to be diligent in how we exercise not only what we say, but what we think. I saw so many people cherry-picking parts of the report to misinform or create a bit of an anger rally on Twitter. It's incredibly sad seeing people so easily manipulated into misinterpreting things. I want to take a quick moment to go over some of the things that I saw being misrepresented the most and put some clarity to them. The biggest among them all was that the report stated that all actions that took place during the January events were all caused by retail. The report does not say this. The report says that the upward price action was caused by retail, but not all action. If you think a little deeper into this, what it implies is that much of the trading that you saw were synthetic shares being traded, and not retail alone. This gives validity to much of what we have speculated over the months, and should serve as verification and validation for much of what we already quote-unquote knew about how GameStop and AMC traded and continue to trade. This is a huge bullish development that should serve as proof to us, but instead was undermined because people wanted to exaggerate the statements, and in their attempt to get clicks they undermined the real value that the real statement had. I understand that anger sells really well on the internet, but if we abstain from following through such traps, you will always reap the best benefits of it all. In fact, if you want to get all jacked up, let's dive a little deeper into this. The report says the volume experienced for GameStop was over 1 billion for the month of January. Some fundamental analysis based on some of the data provided by the SEC in this report easily suggests that retail traders bought a minimum of at least 15 times the float of the stock on January alone. The report stated that there were 900,000 unique buyers of GameStop during the month of January. If there were 1 billion trades that took place, that would mean that the average shares per investor is above 1,000. We know there were some huge whales in this stock back on January alone too, and seeing that everyone and their grandmother quickly got into the stock, this is actually the most probably scenario. I understand that a substantial number of people left the stock after it didn't squeeze and Robinhood and other brokers prohibited the purchase, but many of those investors have returned and many others never left at all. This is so incredibly bullish. I have no doubt that we currently have way over 15 times the float and that the only thing being sold right now are synthetic shares. This report just illustrated and proved this statement to be a fact, so I really don't get how anyone can be upset at it. I am jacked to the absolute maximum right now. Another important fact that was sadly undermined and ignored by investors in the report is the fact that market makers and other institutions traded the stocks based on non-public information pertaining to certain positions moving to close, and yet they continued to short those same securities. In other words, the SEC wrote a report in which they admit that they knew that market makers involved in the meme stock sage were committing crimes known as insider trading, yet the SEC never punished them or made no indication that they are looking to punish them in the future. This is an outright show of contempt against their own duties and shows exactly the extent that Wall Street is willing to go know that they have the SEC so easily handled. If you pay close attention, you will also come to understand why the SEC cannot go out and say something like, "Kenny is bad and a criminal because of this and that." If they did that, it would affect the markets and potentially bring enough legislative interventions in which they might actually be forced to be more competent, which we know members of the SEC are not really interested in doing since their job there have clear secondary and hidden motivations. The truth of the matter is that the SEC knows what is going on, but they cannot make a big substantial deep dive investigation because they know exactly what will be found, which will inevitably cause some big radical changes that could produce a squeeze. However, that does not make the report any less important. In fact, the GameStop report by the SEC is the biggest piece of evidence to place your trust and dissolve any misinformation or uncertainty in your investments of meme stocks. The data provided by the SEC there goes to show that shorts never covered and that nothing has changed at all. The greatest threat to our cause is the inability to correctly judge and see things for what they are. As you might have seen from other YouTubers or posts on social media, people were calling out the SEC report as being underwhelming and disappointing, when it was actually the exact opposite. It showed and gave validity to what we knew. The only ones disappointed in this were the ones that had unrealistic expectations. If you think the SEC will ever say Wall Street is guilty before the squeeze, you might want to close off the internet, stop reading posts that only say what you want to hear, perhaps go out into the real world, talk to a girl or something and join the rest of us more practical folk. We are clearly winning this game by a long shot, and each day that the squeeze is delayed can only result in an elevated price floor. I hope to have inspired a bit of a wrinkle of hope for some of you who were so clearly misguided by clowns seeking clicks online. I want to thank Gary Gensler who allowed the release of this report. Had it been another SEC chair, this would have never seen the light of day. You all know I have some very different opinions and have gone to great lengths critiquing Gary Gensler's approach to different parts of the market, in particular to cryptocurrencies. However, he is clearly keen on taking out dark pools and seems to want to bring a new era of regulations to the market, which many are much needed. I applaud his willingness to put this report out there, as it shows much needed transparency. Thank you all for watching the video to the end. Let me know your comments down below. You guys are all amazing and I thank you so much for being here with me. If you want to support the channel, I have left links in the description for my Patreon if you would like to pledge a monthly support of any amount you want. I also left a PayPal and Cash App link if you want to make a one-time donation. I will be making another video for tomorrow as to what to expect this upcoming week. We have some minor stuff to talk about, so I hope to see you guys on the next one. Until then, have an amazing weekend. I want to see the new Dune movie tonight, so I am super excited. I also downloaded Doom Eternal Games, so tonight out to be a blast. Tons of really cool stuff, and I hope you guys also have fun stuff going on. Stay strong. Buy the dip and to the moon.